Sturm and Drang are the words borrowed from German language and they literally mean storm and stress. Welcome to My Two Phil's podcast, the show that helps you grow wealth, create passive income, and achieve your financial goals faster. I am your host Damodar Mata, author, blogger, and financial advisor in Dubai. This is weekly market update as of 29th January 2022. Tune in every week for news, views, and market moves. The title of today's episode is Sturm and Drang. These are perhaps the right words to describe the prevailing global market situation. These words come from the German language, literally meaning storm and stress. In a storm created by the rising inflation and the Fed, the markets are stressed over increasing interest rates and liquidity concerns. Last week, the US indices were on a roller coaster ride going up and down, finally ending the week marginally up, thanks to stellar earning reports of index heavyweights like Apple, Tesla, and Microsoft. The Friday's 3.13% rally saved Nasdaq from officially entering the bear market territory. For the week, the Dow was up by 1.3%, S&P 500 by 0.8%, while the Nasdaq was flat. The YTD numbers are Dow minus 4.4%, S&P 500 minus 7%, and the Nasdaq minus 12%. As expected, the overall corporate earnings continued to grow, with earnings expansion expected to be in line with the historical average of 9%. Despite some outstanding earning numbers from companies like Apple, Tesla, Microsoft, and Intel, markets have not rewarded them adequately amidst the prevailing weak sentiment. We will continue to see persistent volatility during the earnings season as some people buy on dips while the others sell the rally. Moving on to Europe. European equities fell for the fourth week in a row owing to the Russia-Ukraine crisis and a stringent monetary policy by the respective central banks. The Eurostock index was down by 1.87%, while the FTSE 100 was down by 0.37%. Moving further east into India and China. Chinese equities continue to fall on global weak cues and are officially in bear market territory. Last week, the Shanghai Composite Index lost 4.6%, and the CSI 300 index slid 4.5%, falling more than 20% from its peak in 2021. Indian equities were in the red for the second week in a row on global cues, rising crude prices, and sustained FII selling. The Sensex fell by 3.1%, and the Nifty slid by 2.92%. The FIIs continued to sell heavily from 2021 and into January 2022. Hopefully, the budget 2022 will give them a few reasons to reverse this trend. Outlook. As stated in the 17th January edition, a bumpy ride, 2022 is perhaps the year to focus on the return of your capital rather than the return on your capital. Markets may be volatile throughout the year, so it would be wise to use the rallies to reduce risk and diversify into value stocks and safe havens. People sitting on the sidelines and long-term investors can find more than a few bargains amidst these corrections. As global economies continue to grow at a healthy pace, the outlook for equities is still bullish. However, growth will be moderate, unlike in 2020 and 2021. Also to be noted that escalating geopolitical events like Russia-Ukraine crisis can be a spoilsport. This was weekly market update as of 29th January 2022. I hope you found it useful and engaging. Tune in every week for news, views, and market moves. Subscribe on YouTube, Google or Apple Podcasts or on your favorite podcast app. I'm your host Damodar Mata. Until next week, stay safe, stay invested.